Economic occupancy is the single most important number that you will find on your spreadsheet, because economic occupancy, if you don't know this, you got to be clear on this. It takes into consideration your regular vacancy, your bad debt, concessions. It takes into consideration all of the losses that you may see, potentially your loss to lease that you can't lease. Now you've got clarity on how much of a gap do we truly have at the property. Hey everybody, welcome to another episode of Keeping It Real Estate. I'm Dan Brisse. Today, you guys, I want to give you an asset management 101 overview. If you own apartments or you own real estate, I just want to show you guys, this is what we look at every single week. Our lead asset managers direct these calls, direct the performance of the property management company. Now, something I just wanted to discuss before I dive in is, a lot of the leadership and asset management that you may need to do, or, maybe you're with a group, depending on your size, you're going to have more workability, more leverage, if you will. If you own 35 units and that's the only apartment you have, and you're with, a group that manages 10, 15, 20,000 units, you got to be a little bit delicate. Whereas let's say you're with a management firm that has 8,000 units and they have 4,000 of them. Yours are 4,000 of them. You're going to have a lot more leverage, right? If you have 50% of their income, obviously you have a lot more control and you demand a lot more from them, but you also provide a tremendous amount of value to them. So as you are in the asset management role, it's very, very critical for you to be a great leader. And this is something where I think leadership actually is the separator, right? And leadership to us, or to Granite Towers, is, to create a future that wasn't going to happen, that fulfills on, or attempts to fulfill on, all relevant parties. And when you're asset managing a deal, all relevant parties, that can consist of your tenants, right? That can consist of the on-site team. That'll consist of your investors. It's going to consist of potentially the people that work at your personal company, and a whole stack of other folks. So leadership really is a critical skill to continue to develop as an asset manager, and just to be a very competent asset manager. And that's what this episode is designed for. We're going to run through the basics of what you really should be tuned in on every week or every other week, depending on how long and how stable your asset is rolling. So one of the things we tune into, we call it the daily prospect tracker. We're curious when we get on for a week with the leasing agent, who's come through the door? What are their move-in dates that they're looking for, right? What marketing source did they hear about us from? Was it a current resident referral? Was it a property website? Was it apartments.com? Was it some new AI? Was it TikTok? The more you can be clear on what marketing source is working, the better, right? It shows you where to double down. Maybe a tour. Hey, did they take a tour? Yes or no? Did they apply? Yes or no? Did they give feedback? Yes or no? What else are they looking for? This information, especially in the market we're in of 2026, is invaluable data, right? It tells you why people are coming through your front door. You don't have people coming through your front door, I can tell you right now, you're not going to be leasing many units, right? And, a lot of times, depending on the asset class, you can have a ton of current resident referrals. That's one of the main ways we have new tours coming through a lot of our deals in some of our older properties, right? They have family members that want to live on similar apartment with them. They want to be able to get close together. And so when a unit comes up, they may refer their dad or their sister or their uncle, right? And so you've got a lot of resident referrals. On your newer properties, you might have apartments.com really helping you out there. People that are shopping more online, right? Or you have drive-by, depending on how, aggressive that drive-by street is, or maybe your website. So get really tuned into that. And you really want to have a pulse on that week by week, and then it shows you where to double down. Another tab that we really love to tune into, you guys, and this is something I wouldn't say is likely to be given to you unless you have a lot of leverage with your management company, right? Unless you're very actively buying and you're bringing more assets in and you're really helping that property management company grow, you may not get this level of treatment. But week by week, you have a budget, right? The budget has been created. It should be created and polished by November the year before. Then you get into the year. We got January, February, March. You're rolling through these months. But what happens is it's important to get ahead of just getting the final financials, right? So let's just say, in February, mid-February, you get to see the January financials. Well, if that's the first time you're looking at the January financials, you might see ghosts in those numbers. You might see very critical mistakes because the numbers tell the story, right? You're going to be able to see how a property is operating very quickly by how well they're hitting their budget for income, their budget for expenses, and their net operating income, and then how much they're hitting for CapEx based on the budget as well, right? So in, let's just say, the middle of the month, you can see the income is way low, right? And you might see this in other KPIs as well, but your delinquency is low. Hey, what are you guys doing there? Or, hey, we're way high on expenses at this time of the year for, maintenance and repairs. What's going on? What is happening? And to be able to have that level of conversation real time, and again, a forecasting tab has your budget and then how you're doing compared to that budget every week. And you can figure out, are we tracking to hit the budget at the end of the month, or are we way off? And you're going to need that and want that to really have a good idea of how you're doing week by week, and if there's some red flags that are coming up, so you can get ahead of that. The biggest piece, though, you guys, that we're focused on is we're looking at a bunch of different key performance indicators, and I'm just going to run through them. So for us, we're looking at our occupancy, obviously our 30-day trend. What's our 60-day trend? And most importantly, what's our economic occupancy? Economic occupancy is the single most important number that you will find on your spreadsheet, because economic occupancy, if you don't know this, you got to be clear on this. It takes into consideration your regular vacancy, your bad debt, concessions. It takes into consideration all of the losses that you may see, potentially your loss to lease that you can't lease. Now you've got clarity on how much of a gap do we truly have at the property. Because if you're 95% occupied, but 10% of the units aren't paying rent, that's actually worse, right? Now you got 10% of the people living there causing damage to a property and not paying you rent that you got to figure out how to evict. I'd rather be 85% occupancy, 100% collected than 95% occupancy with 10% delinquent, right? You'd rather have the vacant units. And so you've got to be very tuned into your economic occupancy. And that comes down to tracking your current delinquency, right? What's your 30-day delinquency? What's your 60? What's your 90-day? And you can tell pretty dang quick how great or how poor your on-site staff is performing when it comes to selecting residents to allow into the building, when it comes to following up with demanding rent or filing an eviction. Then you got your total delinquent, right? What's your total vacant? What's your total ready? What's your week-to-date move-ins? Like how many moved in this week and how many moved out? What's your week-to-date renewals that were signed? Like how many renewals were signed this week? How many total have been upgraded? You got to track that number week by week. How many total are still classic, right? How many outstanding work orders do we have this week? How many are on notice? How many were pre-lease? What's your total traffic? How many showings did you have, right? How many applied this week? How many of those that applied were approved? How many are still pending? How many were denied? What's the number of evictions that are in process? These are all super critical KPIs to be tuning into week after week. What's your accounts payable on your 30, 60, 90? Those are key performance indicators that you really have to be tracking. It's critical. Another thing we love to track is our daily deposits. We have a daily deposit tracker, and we can measure how much money is coming in each month and by what date. And you can start to spot trends, right? You can start to really see what is our total income on this property, and is it going up or is it going down? Obviously, you want to see it trending up. You have a pro forma rents tab, right? Before you buy any deal, you're going to shop the submarket and get clear on what is going on in that submarket. And then you're going to create a business plan of how you're going to achieve the rents the submarket is getting. Maybe it's a value add strategy. Maybe it's just poor management, whatever it may be. You're going to now be measuring how well you're doing to hit your pro forma, which is your projected rents. And you're going to have potentially a pro forma rent for years 1, 2, 3, 4, 5. And ideally, you're going up, right? That's the whole goal as a apartment investor, is to bring value to your residents in a supply constrained environment so you can move rent and drive net operating income. And so you want to be measuring, where are our rents at in comparison to what we projected they would be at, and how are we doing in the submarket? So you're going to also have on this tab your competitors, right? Comp 1 through 4, 5, 6, whatever you have as true comps. And so a comp for us is similar unit count, similar year built within 5 years of each other, similar amenity package, similar tenant profile, similar location. And that makes a true competitor, right? You're not going to put a comp, if you got a 1975 property, you're not going to compare it to a 2005 built product on the other side of town. It's just not a comparable property. Your resident profile that's shopping at your 1970s property isn't going to go turn around and start shopping at a 2005 property, right? So you got to make sure your comps are true comps. And then you're going to build, ideally, a connection and relationship with these other folks so you can all be super efficient and offer a fair market value rental price. And so you want to get clear on what their occupancy is, right? You want to get clear on what their 1 bedroom and 2 bedroom and 3 bedroom pricing is, and how do you compare, right? How do we compare based off of what they're getting at comps 1 through 4? How are we doing? There's a couple comps that are very strong occupancy with high rent. You got to secretly shop those folks. Hey, what are they doing over here? It's not uncommon. People secretly shop us all the time. I'm certain of it. That's the name of the game. It's not even frowned upon. It's just what you do to get clarity on how do you perform for your residents and how do you take care of your assets. We've got a tab that's a weekly questions tab, right? Like, hey, we got some weekly questions that need to be discussed as the team. We got the regional on, we got the on-site team on, and we got the asset manager on. And we're going to go through all of these major questions as a team so we can all make dang sure that we're clear on, hey, what is happening and why and how are we handling it? And then you're going to have an LTO tab. You guys, this LTO tab is so critical. A lease in that LTO tab stands for a lease trade out tab. And you're measuring, really simply, the date there was a renewal signed or a new lease, right? You're measuring the floor plan and the square footage, and then you're measuring the previous rent with the new rent. It's that simple. And then there's a variance. Ideally, you're having very positive variances, right? Ideally, you're in a position where you're growing your rent. And if that's not the case, why? Right? This is the information that you really have to be tuned into. And so those are just some of the tabs we're tuned into on a weekly basis, especially on a new asset, right? If we've been in an asset for 12, 18, 24 months, and there's not a lot of movement, you maybe don't need to bother your on-site staff every week. You don't have to have such a finger on the pulse of exactly what happened this week. But, a big part of an ownership group, if you're doing a great job, is leading your staff, being there for them, making sure that they know that you're on their team, that you're dialed in to win together, right? Because, if you got some properties that aren't that big of properties, let's just say it's 115 units, you got one person in, one person out, there may be some lonely days there, right? You're in the office every day by yourself. Everything only gets done if you're there. If you're sick, now you fall behind. And so to have an asset management team in a regional that's very well connected, very tuned in, and a finger on the pulse to help can be a really big deal. So that's the way I'd encourage you to look at it. And if you're in a position where that's not how it is, check with yourself. I think it's easy as operators and owners to project and underwrite these outlandish rents and returns in hopes of this sunny, beautiful future. Let's just say you bought something in 2021 and you projected rent to continue to go north. Well, it hasn't. And it's easy, very easy to come and point the finger at your on-site team for not doing everything and really break down trust and just erode their confidence and ability to show up and perform based on the submarket data. And so be cautious of that. That's not going to create a win-win environment, right? If you over projected rent and you can clearly see the submarket is 250, 300, 400 below what you projected, that's not your on-site's fault. Okay. That's an operator error in underwriting from back when the times were different than they are today. And so be there for your team, step up as leadership. Of course, if you're making agreements and they're not following through on those agreements, yeah, then you may need to make a change. But really do your best to get in their shoes, support them, make really clear outcomes and goals for your on-site team, and then support them along the way to hopefully, take care of these residents, because leadership, again, is to create a future that wasn't going to happen, that fulfills on our attempts to fulfill on all relevant parties. And so if you follow some of these guidelines, you come in with great leadership, you support your staff, I think you're going to do very well over these next few years as we see this massive glut of supply finally getting absorbed, and we start to finally see some rental increases in the market after going through such a brutal time over the last few years. If you like what we're talking about, you want to learn more, click the link below and let's reach out and have a 30-minute discussion.